Okay, in today's video we're going to take a look at MGM, and I'm doing this on a weekly chart, and I already did the work on it, but I took it off so I could do it again so you can see where it comes from. So I do have a setup. It's basically a two-step pattern setup after this initial rally off of support on the weekly chart in MGM, and there's a zigzag pattern. Now as far as price relationships, from the low to the high, we have a 786 retracement at 23.45. From the low to the high here, we have a 1272 extension that comes in at 23.79. Overlaps the 786. We also have a 100% projection of the first swing down. Okay, that's what we need for the two-step. That comes in at 23.43. So you have, a price cluster. It's the minimum of 3 price relationships that come together within a relatively tight range. And it hit, it held, I'm sure it triggered at least on a short-term time frame. But what else you have here is you have a couple of other similar swings. So this swing, high to low, and this high to low swing. So I'm also going to add those price relationships. I'm going to take the prior high to low swing and project it from the prior high here. And then the slightly higher high to the low, that just comes in just a little bit lower. And that's what gives us our cluster now of 5 price relationships at 23.27 to 23.79. So what does this do for you? It basically defines risk on the buy side. So as long as price continues to hold above this general area, I would be okay with looking at the buy side in MGM with the risk definition underneath this zone. Basically, I'm wrong if it breaks that area. Now, if it ends up holding, then your upside potential off of this two-step pattern swing is going to be 31.99 as far as target 1, and then 34.25 as far as target 2. So it is a setup. You have definition of risk, you have potential targets, and yeah, it's worth looking at.